This was a really good example of how my system can flag a sector and stocks that are about to break out of a defined trading range. So let's have a look at the uranium price over the long term. It was in a long, drawn-out bear market for years after Fukushima. I'm sure people will remember that. And what I want people to notice is this huge spike from 2000 to 2007. And this is where, as people would know, I'm looking for major retracements of waves into what I call the buy zone, which is a 75 to 87% retracement of that prior wave. So that is the wave there, and here we've got the buy zone down here. All that's saying is it's an area where I'm alert to the possibility that prices could turn around. So after Fukushima, it was all over for uranium. The price went down and down and down below the cost of producing uranium, and it was all over for the sector. So people were shutting down mines, no one was out searching for any uranium, it was an oversupplied market, no one had any interest in it. But then we've had a bit of a shift, didn't we, in the last few years, where people started to think maybe uranium could be a possible, transition from fossil fuels. And all of a sudden, there was a bit of a shift in the market for demand and supply as well. So this is when I started to see the beginning of an uptrend start to develop to the upside out of that key buy zone area that I'm telling you about. So when I got the buy signal for uranium, I basically gave my members two options at the time to play uranium, and both of them are paying off really well. So this first stock that we entered was actually an ETF, which is an exchange traded fund, and basically that gives you access to the whole sector. This particular one gives you exposure to the top uranium companies in the world, and when you do that, it's a lot less risky than jumping into a single stock, I can tell you that much. And so we jumped into that one first. You saw I got the buy signal in the uranium itself, and then this particular stock gave me a buy signal, and that was when it turned up with a monthly buy pivot back in sort of middle of last year, and we got in at $6. 6.03 was the actual price, $6.03, and you can see that was just before, a month or two before the blast off actually occurred. So we had the luxury of taking profit while everyone else was scrambling to get in, and we took part profit here at $7.80. So that was less than 2 months later that we took that part profit. And from that point on, we're either going to break even or we're going to make money. And how would you feel if you knew that was the situation, rather than being worried every day whether you're going to lose money or make money? And so that's really the crux of my system, is about getting in at a point when you're as close as you can be to an explosive move. Now, it doesn't work every time, but hopefully you'll see that I've done this again and again over the past year in these different commodities. And the point is that now that we've sold that third of the position, we've still got 2/3 of what we initially bought, and we can sit back and relax and watch the price head higher, knowing that we are only going to risk not 1 cent of our original capital that we put in. And at this point, we have uranium, or this ETF, trading up at $10. In less than a year, after we bought it at $6, and we were never very far out of the money at all on that position. So the second stock we got into was an individual uranium stock. I can't give you its name because it is still actually an active trade. And of course, being an individual stock, that's a lot riskier proposition than an ETF, but you're looking for higher returns. So with this one, looking at this chart you can see of this stock over the last few years, going to 2017, what I want you to notice is the big wave to the upside from 2020 up into 2021. And as I've said, on waves or ranges, I'm looking at the retracements of those waves. I like to see them come near to or into the buy zone, which is at 75 to 87% retracement. Once it gets around that area, I'm waiting for signs of it turning back up. And that's where I'm looking for that buy pivot, which is a sign of a reversal, which is saying that it's going from going down to potentially going up. And once I've got that signal, I'm then saying, right, this is now potentially the beginning of the next wave to the upside. So we're thinking of waves like this, big correction and then the next wave. That's what I want to get on. So we got in early. We bought this one at 78 cents here, around here, just before, again, prices really rocketed higher. And in this one, similar to the ETF, I had an initial target up at around $1.15, up around here. And you can see that we'd hit that initial target within a couple of months. So going from 78 cents up to $1.15, where I told people to sell a third of their position and then adjust the stop loss to a point where they would break even on the whole trade. So if things went bad, and we all know they can, prices nosedived, they would have stopped out and they would have had their original capital safe. And I just can't tell you how much that changes your mental state when you're a trader, investor in the stock market. When you know that your original capital is safe, I mean, you are fine. You're playing with their money. This is where I aim to get with all my trades quickly. It's about relaxing and saying, look, right, now I know the worst that can happen is that I'm going to break even on the trade. And I tell you, it is absolutely vitally important for your mental state as a trader to be able to get yourself to that point. So please tune in tomorrow and I'll show you how I did this in the gold sector as well, just over the last few months. And I'll show you how we can shoot for unlimited upside on these trades.